So as we discussed in the last session, you see that there is no depreciation portion in the income statement, correct? So depreciation needs to be firstly forecasted. Okay, one more thing I have to do, come to the cash flow statement. We also need to put 2024 for cash flows. So page number, I think 92 must be having a cash flow. No, 91 page. So you see that depreciation portion, which is 15,498. So you have to paste it here. You don't have to do all the cash flow line item. Only two line items are required, which is cash flow statement DNA, which can come from here. You see on my screen in the cash flow, you have this 15,498. And then you need to have a capital expenditure here. So capital expenditure will be this number, 37,256. So that will also be copied and we'll paste it here. So do you have all these 6 numbers now?
Yes,
You must
sir.
have posted 2024. Now we need to firstly do the forecasting of depreciation to start with after the income statement. So what we will do is we will add a new sheet, which is DNA, right? And important thing is that, see, for DNA, you have to firstly copy this header. Do you see that header starting from that X till this 29, which is B3 to K4? Copy that area, the header only, please remember, and paste it in the DNA sheet, which is in the same cell. You have to paste it B3. So here you have to mention DNA. So what I've done is I've just copied the header and instead of income statement, I've written the word DNA in the header. Is that clear?
Yes, sir.
Right. Now, guys, thing is that you can stop the work. Maybe I will be doing everything and you need to just look at the screen. So first thing that will come is your revenue. So revenue, can we take it from operating model? We have the revenue number, which is 116 से लेके 389. So I'll just link that number 116. So it will come here and drag it. So when I drag it, I'll get all the revenue from this to here, right? You just need to link the first number is equal to, go there, select that, enter, and drag it. So you will get all the numbers in the sheet. Now, as I said, we need to do the DNA. This is the DNA schedule. The first thing that will come is capital expenditure. Capital expenditure. So we need only 3 years of data for CAPEX. So where can I get CAPEX from?
Cash flow statement.
From the income statement, sir.
No, from the cash flow. So we will come here. You see that you have capital expenditure, which is 31,027 and 30. So just select the first one and drag it. So I've got my capital expenditure here. Now the first thing is that we need to do the forecasting of this. How to do the forecasting of capital expenditure that I'm going to tell you. First thing, that calculate it as a percentage of sales or percentage of revenue. Sales and revenue, I'm using it interchangeably. So both are same, percentage of revenue. So CapEx divided by the sales. So I have got these numbers, drag it, hit a percentage sign so that it converts into percentage. So basically what you're doing is that on an average, you're spending 27, 20, and 23% of your sales towards capital expenditure. This percentages of sales that you're spending on the machinery. Capital expenditure is what? It is a purchase of machinery, plant, equipment, all the fixed assets you're purchasing. So any investment that you want to make in CAPEX, And why do we do capex? Any idea why do we purchase machinery, plant, and equipment? And why we do capital expenditure? What is the reason behind it? So first thing that you will do the capex to increase the production. When you buy machinery, what do? You increase the production efficiency of our organization and increase the production, and in fact maintain the current projection, current business. So you have to keep buying assets, machinery, from time to time. So what I'll do an average of all the three. So this is 23%, means I'm assuming that on an average, I'm spending 23% towards the capital expenditure. And I will just keep it as it is, the previous one. So I need to forecast 23% of revenue as capex. So how can I do this? Revenue into capex percentage, which is 45,000, and drag it. So I have got my capital expenditure, which is this. Clear? Now, since we have to do DNA, so for DNA we apply on the fixed assets. So we need to use a PP&E here, property, plant, and equipment. We need to bring the opening balance, and we need to also have a closing balance. So closing balance I need. So what I can do is I can bring the closing balance from. Where will I get a closing balance of PP&E from which statement? So we will
Can I
detect
repeat?
balance sheet. You see that property, plant, and equipment PP&E is provided here. So we'll select the 79,508, which is a closing figure. So I will only forecast, drag it for 3 years. This is our closing. So now can we say that the last year closing is the next year opening?
Yes.
29,000 will be the next year opening. And we can drag 3 years here also. So the closing of 24 will be opening of 25. Now, can you tell me what will you do plus minus here so that your opening to closing arrives? What is the difference between opening and closing?
We'll add capex and we'll subtract depreciation.
Very good. So we will add capital expenditure because see, this is your opening asset. Then you are buying this asset extra. So that will come here. So that is capital expenditure. So I can do this is equal to this. But this is a negative figure here, but we have to do it positive. So I can keep a minus sign again so that it becomes positive. So these two will be your total capex, PP&E. This is the opening. This is the addition of capex. So if you sum it up, 121 plus 45, the total closing is 166. But we also need to do depreciation deduction because depreciation will decrease our assets. So you will be charging depreciation on these two things, and that you will be charging it in this cell, right? This is blank for now, but we will be linking this soon. Before we link it up, select this area and then drag it towards right side. So you will get at least all the numbers except the DNA portion or depreciation portion. Now the next is we need to have DNA. DNA, we can bring it here, the historical DNA. So where will I get DNA from?
Cash flow operating.
Operating activities of cash flow.
Yes.
So you have this DNA, 8, 11, and 15. So select and drag 3 years of DNA. Now this DNA is basically your total DNA. Now you know the difference between depreciation and amortization. What is amortization and what is depreciation? Depreciation is charged on fixed assets. Amortization is charged on intangible assets. So what we can do is we can try to break down the DNA as depreciation separate and amortization separate. If in case there is an option available, because I don't know that 15,000 DNA, can we get the breakdown of this or not in the annual report? So we need to check that. So we will go to annual report. We will select 15,000 number as DNA, copy, Control F, search for this number that you see it here, but there is no breakdown available. So we do not know that the total DNA, the breakdown, how much of that is D and how much of that is A, because the breakdown is not available, correct? We can do one more search. We can do amortization search, amortization, and check. Now, the good thing is that you see this information, amortization for intangible assets, because I told you amortization is an intangible asset, which was 23, 22, 22 पे दिया हुआ है. 24 amortization is 211, correct? So what I'll do is 211. Then 161 and 185. So 161, 185. So this is your amortization, which is blue because it's a hard punch. Now, can I do something like this? DNA minus amortization is my depreciation because it will exclude it. Copy, paste, and paste. So this is my pure depreciation. Clear, everyone?
Yes, sir.
Now, what I'll do is I need to just, because I told you that we will be only depreciating it here. So I need to forecast this area so that I know depreciation portion, not the full portion. So depreciation is charged on percentage of PP&E because you will be charging depreciation on PP&E. So what I can do is, before I use a formula, I need to do one more thing. I need a capex for these 2 years also. So the capex for these 2 years is this, the historical one. So I can just drag it back. So 27, 27, 37, 37. So now what I'll do is equal to, this is my depreciation divided by, this is my depreciation divided by, I will be charging 15,000 on these two numbers. The opening balance will also charge depreciation, and new machinery that you purchase, that will also ask for depreciation. So both you will put at a denominator. So on a percentage, so just select you got 0, click on percentage. So you are actually charging, can we say 11% depreciation on your assets? Is this
Yeah.
formula clear to everyone?
Yes, sir.
Yes.
Copy
Yes, sir.
this, paste it here also. You are charging on depreciation of 11,000 on these two items. So on an average, you are charging a depreciation of 11%, 10% or 11%. But I cannot paste it here because the opening of this is not available. So I can just leave it. We can just focus on these two numbers. I will do one thing. I will take an average. So I'm assuming that on an average, we are charging 11% depreciation. And select like this, drag it. So I've got 11% as a forecasting that on an average, whatever the asset that I have, I can charge or I should charge 11% depreciation. So how do I do that? 11% of these two, because I'll be charging depreciation of 11% on these two number, opening and capex. So this is my depreciation and I can drag it. So this is my depreciation projection. Is this clear, everyone? Any questions? Please feel free to ask. Any question till this stage?
No, sir.
No, sir.
See, the idea is that you should be convinced with what I'm saying, what I'm doing. You should be convinced with that because you can do this later on in the after the class. And I'm sure that if you follow the steps, you'll also be able to calculate. If I can do it, you can also do it, right? So 18,000 is a depreciation. So what I'll do is equal to, I will use a minus sign because I have to deduct the depreciation, which is 18,000. So this is a minus figure now, and I will drag it. So that completes my PP&E portion, which is, I'll repeat, opening balance, newer assets purchase was 45,000. Total of PP&E is this. Then I reduce the depreciation portion. My total closing PP&E is 148. And that next year also happens the same thing. And so on till 2029. Logically, I think it makes sense to do it this way.
Yes, sir.
Now the point is we also need a complete DNA, which is addition of depreciation and amortization. So depreciation is ready, but amortization I still have to figure out. Fortunately for US companies like Meta Platforms and other US companies, you generally get amortization, this portion already in the annual report. So you see it here, expected amortization for 2025 is 205, 2026 is 125, and so on. In 2029, the amortization will happen in 20. So they are already providing you the numbers. You just need to punch those numbers. So 205, 125. So I'll say 205, 125, 64, 38, 23. 64, 38, 23. And look at my screen. Can I do this plus this now so that I can combine the DNA for the future?
Yes.
So this is my
Yes, sir.
total DNA and drag it. So I have got this also as a total. Correct? Now the last thing that I have to do is intangibles. Same way you see it here, I have to do intangibles. Intangibles opening, intangibles opening balance, intangibles opening, intangible closing, and then there will also be some plus and minus. Intangible closing I can get from where? Intangible asset closing,
Balance sheet.
balance sheet. So you have intangible asset, which is this, which is 897. We don't have any intangibles here. So I guess I can do one thing, guys. The thing is that sometimes because of the reporting structure, if you have intangibles here, but you don't have intangibles here, if you see the annual report, page number 88 of the balance sheet, sorry, 87, there is no intangibles. Property, you don't have intangibles. But that doesn't mean that you don't have intangibles. Sometimes it is hidden because you see that you have intangible in 897, but you don't have intangible. So it is not that I mentioned zero, but you can make an attempt to do so. Maybe other assets can have intangibles in under that. So what I can do is I can search for this number and get a breakdown 13017, control F 13, comma 017, and see if I'm lucky enough to find the breakdown of it or not. So it was on page number 87. 13017, 13017. Can you check on your annual report if you're getting the breakdown of other assets? It is not there. The breakdown, unfortunately, is not there. Correct? You can also check intangible word, intangible assets, and do some search throughout the annual report and try to find if you get intangible assets for 23, 24. So see, this is little complex, or maybe I don't know if you find it complex or easy. You have a section called goodwill and intangible assets, correct? This is a portion of goodwill. It says changes in carrying amount of goodwill of reportable segment for this. So this is your goodwill. I don't need goodwill. I need only intangible assets. So it says following table provides intangible assets and their weighted average life. So it is for 24 and 23 provided the intangible assets. You have a gross amount of 1393. You have amortization, which is 470, you have deducted. Your final amount of intangible in 24 is 915 and 788. Can I use these two numbers as intangibles in my balance sheet? 915, 788, 915, 788. So I will do this. I will put
Yes, sir.
915, 788. So this is coming from page number 108 of annual report, correct?
Yeah, but you have to subtract them from goodwill.
Yes, I'll do that. So I'll just add a note here so that you know this is annual report 2024, page 108, and we have used intangible schedule from the annual report. Is that clear? Copy this and paste the comment. So how to paste a comment? Paste special. You have comments and notes. Okay. So the same red comment is also there. But the balance sheet will mismatch if you do extra addition. You have to subtract this amount from other assets because you're adding extra money, right? So that must be part of other assets. So minus 788, you can do minus 788 and minus 915. Is this okay? Is this digestible to everyone that what I'm doing? I am just excluding the intangibles from here and putting it here. That's the only thing I'm doing. So I can just put the comment here also and keep it orange so that that intangibles have been removed from here and added separately. I hope this is clear. If you have any questions, Kanak, Mr. Nallu, Priyanshu, Rochan, and Somil, please let me know.
Yes, sir. Sir, but I think we have to subtract from goodwill, no, sir.
When will?
We have to subtract from goodwill, I think.
No. We have to subtract from other assets.
Okay.
Because see, the point is you need to figure out goodwill is a separate item. If you see the balance sheet, the goodwill is separate item. See, if you get a clarity that goodwill includes intangible asset, then deduct from goodwill. If you're not sure, then you can exclude it under assets.
Okay.
So it actually does not clarify here. Nowhere it clarifies that intangible is a part of goodwill because they're using goodwill table here and intangible here. So I'm assuming that it is a part of other assets. Correct? Now, since I've got intangibles, can I now drag and get all the three intangibles because I excluded from it other assets, and then it becomes the opening balance. So you see, sometimes modeling becomes a little difficult that even if it is zero, you need to figure out that do you have intangibles, which is a breakdown. Breakdown, say you just exclude it and remove it from here so that you have all the three numbers of intangibles. And now with that, you got it here. You got it here. Now you have to do what is a plus minus in intangibles. Like you have a capex and depreciation in PP&E. What is that thing that you can put as plus minus here?
We'll have to subtract amortization.
Subtract amortization. And we can say purchases of intangible, purchases of, or anything like plus intangibles. So it says acquired. So acquisition of intangibles, you can mention acquisition or purchase, both are same. If you want to know more about what to write, you can go to cash flow. It says here is that acquisition of intangibles. So acquisition is also the right word instead of purchase. So coming back to that schedule that I was looking for, this is the schedule that I was there. So I can say acquisition for a better clarity. Acquisition of intangibles, correct? Now see, I will use a sum of all the three, which is opening balance plus intangibles plus amortization. So I will just get same because there is no addition as of now. Drag it and use a minus sign and bring the amortization within the schedule. So the moment you bring the negative number, you will have the closing intangible as 460 this, right? Now, I will generally advise you that do not do the projection of intangibles because generally we keep it zero. Correct? Here we did the percentage of sales for capex, but here we'll prefer zero. If you want, you can do it as a percentage of sales. So I'll say acquisition of intangibles. I will need 3 years of data for the history so that I can get it on page number 91, which is your cash flow. You see that acquisition of business intangible asset is provided 3 years of data, 1312, 629, and 270. So that you can put it in a cash flow. Acquisition of intangibles, you see that point? You can fill that with the cash flow. Which is 1312. Then 629. Then 270. So what I'm trying to do is basically, if you have a capex of fixed assets, you should also have a capex for intangibles, which is provided here, right? So this is there. So this I can bring it here in the acquisition of intangibles from here, correct? And then I can do percentage of sales. How to do? Percentage of revenue. So that will be this divided by, because you will be deciding the acquisition of intangible also the percentage of sales. That's the same way you did capex. So approximately you are doing 1%, 0.5, 0.2. So we can take an average, which is 0.6 you are doing as acquisition of intangibles, and you can calculate revenue into the percentage of revenue, which is, this is the new intangibles that you are purchasing, 114, 13, 16, 19, 22. This I can use it here. No issues with that. As the same way I use this here, I can use this portion intangibles purchase in the intangibles purchase. But generally, I would prefer not to do that. Because you see, look at my screen. You did acquisition last year in the history 1312, then you reduce it to 629, then it is 270. But unfortunately, it is increasing so fast. You will not see this trend that 1300, 600, 270. It is declining. Suddenly it is 1100, then 13, 16, 19, 22. So it is increasing unnecessarily, which can actually not be digestible to the client, which I'll be working for. So he will say that why this sudden increase, so like I we were decreasing and suddenly why there is an increase. So we can keep it separate only for the training purpose, but I will not prefer to link it here in the model. Are you getting my point? Connect Mr. Nallu, Rochan, Priyanshu, and
Yes,
Sohan.
sir.
Yes, sir. Yeah.
Yes,
Yeah.
sir.
You should know the procedure to calculate intangible purchase, but you should stay away from linking it unless you feel that it is in line. If it is in line, definitely do that. Otherwise, prefer not to do so. And amortization was provided. That's the reason why I have given it. This is the intangibles provided on page number 109. Now, some students say that, sir, what if I don't have the historic future numbers of intangibles? Because there might be some company which will not provide. So in that case, you will also have to do this. You say you did depreciation of PP&E, you will do amortization as a percentage
Of
of
intangible.
intangibles. Perfect. So if you want, you can do the calculation, which is this divided by sum of what? Sum of opening balance,
Opening and acquisition of.
comma, acquisition of intangibles. But this is minus. I have to keep this minus so that it becomes plus. Is this formula digestible to you that you are charging an amortization of 161 on the opening balance and on the new intangible that you purchased? Correct?
Yes.
So you're getting a percentage of 11% of intangible also. Here you're getting 20%. So that way, what you can do if you want, average then select the previous one, and then you can calculate. This is already calculated, so I can maybe calculate at the bottom, which is 15% of some opening balance, comma, minus 1144. Is this clear? 15% of intangibles is amortization. So I will get from projection 313 and drag it. Now see what the company is providing me is this 205, 125, 64, which is in the declining method, but it is increasing 314, 315, 335. It is very high. So I will not prefer using it. I can just keep this also at the bottom only for your training purpose, so that this area is only for the training purpose. I'm not using it in the model. I hope you have understood what I'm trying to explain it to you. Clear?
Yes, sir.
Yes. Yes, sir.
Great. So I will just try to keep it as a separate notes. Nothing will be included in the model. The model only include till this stage. This is my main area of the model. But now you know how to handle amortization by looking at this. Now it's a time to link all these numbers in the model. So what I'll do is I will keep on linking as and when I have got the numbers. Like PPN is ready for me. I can bring the PPN here.
Yes.
So I can go to this. I can select the PPN closing, which I have now. So which is 148. And if you drag it, you'll get all the numbers. Correct? Then I can do the intangibles also. I have the intangibles ready with me. So intangibles is intangible closing is 710 till 460. Correct? Then I can do the next forecasting. I mean, link the DNA portion, which I have already forecasted, which is this is your DNA 18,000, 22, and 38. So we will include that. Then I will also bring the capex. So capex is your 45,000. This should be a minus figure in the cash flow, so I'm using a minus wala figure. So this is capex, correct? The last thing is acquisition of intangible asset. So please be aware here that I will use this because I am not assuming the intangibles projection. I will not use this intangible because this is only for notes purpose. So this will zero because I am not assuming or I'm not forecasting that what will be my intangibles. I hope this is clear.
Yes.
So 1, 2, 3, 3 projection are here and 2 projection are here. So we have done 5 projection from the single schedule, which is a DNA schedule. I don't think I have anything else to include it here. So this completes the DNA. So what I've done is I have linked all the numbers from the DNA here, which is your PP&E we projected, intangibles we projected, DNA we projected, capex we projected, and this we didn't project, so it is zero. It is linked from that cell. Correct? Any question till this stage? Any question on DNA that you have?
No, sir.
No.
No, sir.
So I hope you'll be able to do this because it might sound a little complex at one glance, but when you do it step by step and follow the instructions, things will be very clear and easy for you. And any which ways you have to become comfortable with this. Do it twice, thrice, whatever number of times you want to do. But DNA is an important schedule. And wherever you feel that this is in line, like suppose this number would have been better, I could have added here so that it have changed. And if in case in some company you don't have amortization numbers, like US company generally provide, but UK Indian company don't provide, so then you can use this as amortization.